everyone, it's another Saturday, which means this is your weekly mixtape for February 3rd, 2018, and this is the weekend review. I'm coming a little closer to you, different angle today, mainly because I forgot the little piece that goes on to my tripod to put my camera on it. So if you go out to my Instagram account, you'll actually see I'm using a bunch of my books as the tripod. So a little different angle today, that's why, but hey, the show goes on. A busy week in news, so I have a lot of different topics to discuss, more than usual as far as number. We're going to try to keep those a little bit shorter so we can get through them without extending this video longer than we usually have it. So lots of news, so let's dive on in, let's get going. First, the week started off with the President's State of the Union. So on Tuesday, President Trump gave his first State of the Union speech. Plenty of political commentary out there, so I'm not going to put any of my spin on it. But I do have 2 points that are not to the speech themselves, but just to the whole evening of the State of the Union speeches. First, I would like to request that we eliminate the standing ovations for everything that a president may say. Now, this is not party specific, both sides do it. It's extremely annoying, it makes it a lot longer, and honestly, because there's so many of these ovations for some things that are not even that great of an idea, it negates the value and the power of having a standing ovation. So let's eliminate those and reserve those for the military spouse whose husband was killed in service, or the important things that might go on during these speeches. Let's reserve the standing ovation for those, not for every little thing that a president may say. And on the flip side of that, the other party, the party not in control, can we pretend as if you want to work together with the other party to make our lives better as Americans? I'm not saying that you have to participate in these ridiculous standing ovations, but you could at least make it look like you want to be there, you want to work with the other side, and not that you hate your life. So if we could change that, you guys could humor us a little bit, make it feel like you're really out about us and not a us versus them mentality between the two parties, I would really appreciate it. I think most of America would as well. So again, this is not specific to this last speech. It's not Republican, Democrat that I'm specifically talking to. I'm talking to both parties because they both do it, and it doesn't really bring any value to the evening. So that's my little 2 cents, not so much about what was said or the delivery or anything like that, but just on the night itself, which is what always happens. So no standing O's, and hey, other party, let's act like you want to be there and you want to work with the other side. Whether you do or not, at least make us feel like it, that you're out for us and our best interest, not just your parties. So let me check my notes. Alright, so we've got Federal Reserve. They met this week, and 2 key things about the Federal Reserve that you're going to hear about. First, they left the Federal Reserve rate, the Fed funds rate, unchanged, which was what was expected. So no increase in rate, but former now Federal Chair Janet Yellen said that with improved economy, wages going up, demand of employment, the supply of workers out there going down, that could lead to the inflation rate going up, which is what they're watching, getting closer to that 2% target. So the expectations out of this meeting are for 3 rate hikes this year. We'll see how they come. That's how we came into the year. That's what the expectations were, and that's what they still are. So we'll see if that continues. And one of the reasons that'll be something we'll watch is, one, we want to see what happens with rates, but secondly, as of today, Janet Yellen is no longer Fed chair, and she's being replaced by Jerome Powell. So changing of the guards. It came out this morning, I saw on my alerts that Yellen officially said that she was disappointed she was not reappointed. Not surprising, I would be disappointed as well. I'm usually not somebody who's necessarily against change, especially if it's warranted. However, I would have liked to see Janet get the chance to finish this whole rate increase process out, since she's been the one running it the last few years. I don't think, from what I've read, that the new chair is going to change from the plan that's already been set in place, but we're in the midst, things are starting to go the way it was supposed to go. Would have liked to see her finish it out and ensure that we're going to go down the path that we're on right now and not have a deviation from that plan, which who knows what could do. So not necessarily a bad thing, not expecting this to blow things up. From everything I've read, the plan will continue as it has been. There's other Fed chairs in there, but that's the other news is Powell is now replacing Yellen as of today. So that'll be another thing you'll hear about. So let me go check this news next. I wish I could say that I memorize all these things, but I don't, so I cheat and I have my iPad out here. Next up, Friday, we had the jobs report. So non-farm payrolls were released, and there was a better than expected number. There were 200,000 jobs added with the expectation of 180,000. So more people put to work. You'll hear some reasons why that might be, warmer weather, different types of things, but nonetheless, better numbers, which this week was actually a negative. So we've entered into a period, we'll see if it's long term or not, that good news from the economy actually is bad news for the stock market, and I'll get to that at the end. But 200,000 new jobs versus 180 expectation. Unemployment stays at 4.1%, which is low, so that's good. So all good news. Continued improvement in the economy, but like I said, this good news actually is a factor into at least Friday's bad day in the market, which I'll talk to in the end. Speaking of the market, we are in earnings season. Usually don't highlight very many individual stocks, but this week was a big week. A lot of companies reported, a lot of big names. The ones you probably heard the most about were Amazon, Apple, Alphabet, Google's parent company. All reported pretty good reports, but different responses from the market. So Amazon blew it out, had a great quarter. Stock rebounded from the day before, made up all of its losses, continued on. So Amazon did real well, to no surprise. So that stock did real well. Apple reported not real bad, but also not as good. They didn't sell as many iPhone 10s as Wall Street had expected. They still sold, I believe it was 77 million, I think that's the number, of 77 million $1,000 phones. Their services, so all the services you buy through the web or from iStore or for the App Store, and then other services tied to owning an iPhone and Apple products, those were all increasing. So Apple really looks good. These expectations for these phones are really what drives Wall Street's response right now. So it did not have a good day after its earnings. You had some cuts on the expectations. So Apple was downgraded by one of the big analysts, which did not help its stock price. But at the end of the day, they're sitting on a lot of cash. They're doing very well. They're still selling phones. The brand is strong. I think Apple is still going to be fine. Not making a stock call, but just, Apple was in the news. You're going to hear about it, read about it. And then Google, Alphabet, they also reported not bad, not great. Stock didn't do too well. But the point of this is not that what these stocks did and whether or not you should go buying them, because that's not what we're doing here. But these are just the companies that reported that you will hear about. Those are the big ones. The 3 A's now. So those reported. Earnings will continue. All in all, earnings season has been pretty good, which has been a positive for the market, which ties into Friday was a bad day for the market, at least on paper. So if you look at the headlines, the Dow Jones was down 665 points. Actually, I think it was 666, but people don't want to use that number. So 665 and some change was how much the Dow was down. Big day number-wise. Percentage-wise, not so great. It was a 2.5% decline, which in a day is a pretty good decline, but it's also not as scary as a 600-point move might look at first, or the way a 600-point move will be spun by the media. If you have a chance, check the blog post I wrote yesterday about this, just talking about the type of numbers that we should expect to see as investors moving plus and minus on the Dow Jones specifically. Yes, I know the Dow Jones for most investors is not the best benchmark to look at. It's 30 companies, it's price weighted. I'll go into those details maybe in a whiteboard, explain what that means to those of you who may not be familiar with it. It's not a true measure of what the U.S. economy is doing, but it's the most well-known index, and it's the biggest, which means it's going to have the biggest numbers, which will be the biggest eyeballs drawn to headlines. So that's the one that's going to be focused, so we might as well talk about that when maybe the S&P and some other indexes are better to watch. So 665 points down. 2.5% decline. A lot of reasons being thrown out as to what caused the decline. Rising interest rates could be one of the reasons. It could be that we just came off of a 21% year, followed up with an 8% January, so maybe some profit sharing or profit taking, or just some selling and cooling off is natural. But it was only 2.5%. This week will be talked about as the worst week since Brexit back in 2016. So think about that. It's been nearly 2 years since we've had a bad week in the stock markets, which is not normal. So as investors, we become spoiled a little bit. So the whole point of this little rant in my blog post that I wrote is just don't let these moves spook you. Just because we have a 2.5% decline, a big number on the Dow going away, does not mean that this is the beginning of the end. It may be the beginning of this correction that all of us investment professionals have been talking about. I've been talking about, reminding you about, that corrections are normal and one will be coming. This might be the beginning of it. It may not be. It may be a very short-lived, like it's been the last 2 years, and we come in Monday and by the end of the day it's recovered and we're off for the races. So don't react. Don't let the media spook you. Definitely don't make any decisions to your portfolio based off of 1 week and 1 day, because we're still at highs in the market. Maybe not all-time highs anymore, but the market is still doing well. If you look at the long-term trend, it's still moving up and to the right, which is what we want to see. So there'll be a number of reasons for the decline Friday. No one really knows. I'm not going to pretend to know. It just is what it is. If you're nervous, talk to your advisor, revisit your plan, revisit your overall portfolio, which should be, as I believe, globally diversified, so that the storm that may have been continued on coming into next week will be weathered, because you have investments spread around outside just large U.S. companies. So make sure you, again, go check my post about your Benjamins. It'll be down in the mixtape to read a little bit more about what you should expect as an investor, as over the long term our indexes get higher and higher. And not only did the stock market struggle this week a little, but cryptocurrencies had a real bad week. They reminded us how young they are in their existence as an investment, how risky they can be. I saw that Bitcoin at one point was down below 8,000, and it was just a few weeks ago that it was above 19,000. So I believe it's a 60% correction from the highs. This is a reminder that cryptocurrency is risky. This is a reminder that you should not be investing in something you don't understand or you're not prepared to hold through times like this. I spent a lot of time over the last year writing about cryptocurrency, talking about it, with the goal of making investors and people who are reading aware of the risks and understanding what it is they're investing in, so that when periods like this happen, they're not panicking and selling, locking in these losses. I don't know what's going to happen with the space, but another advisor that I know, I trust his numbers. I did not verify this, but he spoke many times about how Bitcoin has crashed 80% 5 times in its existence. So 5 times Bitcoin has fallen 80%, we've fallen 60%. This is not out of the norm for this asset class, but a lot of investors rushed in. FOMO got the best of them. They didn't want to miss out on these big gains. They bought at 18,000, 19,000, and here they are down at 8,000, and now they're going to sell because they don't know why they bought it. They just knew that they thought it was going to make a lot of money and go from 19 to 100,000, and it didn't. And here we are with a bad investment experience, a sour taste left in our mouth. This is normal. So again, cryptocurrencies are very risky. If you're not comfortable with it, let this be your reminder to just sit it out. It's okay. You can still do well with your long-term planning using boring, index, low-cost ETFs. Build that portfolio out. Save a lot of money. You can be okay without having to dabble in the cryptocurrency space. But we'll see what happens. But it was a big down week for that area. We'll see what the future holds for that as well. All right, as I get my iPad, check on it real quick. We are to the end of my list of events from this week. The video is running a little long, so I'll be quick at the ending. Thank you if you made it this far. So a lot of news this week, obviously a lot more that I could have discussed, but I thought these were the most important topics. So I hope that was helpful to you, gives you some talking points if you're discussing any of these events with some friends or family for the weekend. Super Bowl weekend, so enjoy the weekend. As a Colts fan, I know this is blasphemy, but I'm going to be rooting for the Patriots. I know the Patriots are America's enemy. If you're not in the New England area, you hate the Patriots, but I can't hate on greatness. I like Tom Brady. I like what he's been able to do with his career, and the hate that they receive makes me want to root for them even more. So I'll be rooting for the Patriots. I'm not a huge football fan, but we always watch the Super Bowl, so we'll be watching that to see what happens. And if you've been watching these videos the last few weeks, you know I'm definitely going to be watching the halftime show. My boy JT is performing. Speaking of Justin Timberlake, his album is out. I'm not going to talk a whole lot about it. It's a good album, but I did want to point out one song for those parents out there that have a son or sons. The very last song, called Young Man, is a great song. You should listen to it with your boys. If I was talented enough to write music, this would have been a type of song that I would have written for Roman, Leo, and Silas. So a very good song. Love the messaging behind it. If you're a boy, mom, or dad, check it out. I think you'll enjoy it. So make sure you visit down below. Check the post for this week's mixtape. Hope you enjoy those. I always try to pick ones I think that are good and enlightening. So check those out. Enjoy your week. I'll see you next weekend, which happens to be my birthday weekend, and I also believe it is All-Star Weekend in the NBA, which is always my favorite with the dunk contest and everything. I may be off on that, but usually it falls on my weekend birthday, or my birthday weekend. So have a great week, and until the next episode, have a good one.